All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing I want to talk about is XRP Army gets relist XRP trending and demands exchanges comply. So members of the XRP Army, supporters of the XRP token, have started an online movement to pressure crypto exchanges to relist the digital asset amid Ripple facing a lawsuit from the SEC. According to Twitter user MacAttackXRP, the hashtag relistxrp was trending in the Netherlands earlier today, with some users reporting the social media movement was gaining traction in Australia, the United States, and the United Kingdom, which I actually went on Twitter after I seen this and typed in hashtag relistxrp, and sure enough, it was there was quite a few tweets from it. I don't remember if it was actually tweeting. I didn't look at the trending page, but there was quite a bit of tweets indeed. Twitter data showed more than 35,000 tweets with the hashtag in the Netherlands, more than 30,000 tweets in the US, and roughly 24,000 in Australia. And the campaign is reportedly an attempt to draw attention to crypto exchanges that have delisted or suspended the trading of XRP, which happened in December 2020. The SEC charged Ripple CEO Brad Garlinghouse, co-founder Chris Larsen, with conducting an unregistered, ongoing digital asset securities offering for their XRP sales. It's important to note, too, I don't know if it's in the article or not, but Bitcoin and Ethereum are not considered securities. In fact, there was an SEC lawsuit, trial, etc., whatever you want to call it, into Ethereum, and they found it to be not a security. And XRP is similar to Ethereum. Of course, there isn't a mining aspect of XRP, but I don't think this is really going to go through well for the SEC. I think they're just going to be found to be money and not necessarily some kind of security. And then when these exchanges do relist XRP or unsuspend XRP, I think there's going to be a big rally back. In fact, Grayscale used to have tens of millions of dollars worth of XRP. They dissolved the fund over all of this FUD, and so there's probably a lot of people waiting to buy XRP. And it's not the fact that people can't find a different exchange that still has XRP on it, but rather just the fear, and particularly the institutional level fear of XRP. That they wouldn't want to be buying a security and then having to basically just completely dump it in the event that they would be in trouble for having it or something like that. So there is a level of fear around it that a lot of people aren't going to buy it because they fear that their asset will decline if it's found to be a security, which I sort of doubt that it's going to be. The exchanges that halted trading for XRP or delisted it include Coinbase, OKCoin, Bittrex, Bitstamp, Binance US, Crypto.com, iTrust Capital, eToro, Genesis, Nexo, and the list goes on. I think there's over 30 of them. Other crypto firms have deferred taking action against the token. For example, Uphold said it will not delist XRP. Unfortunately, Uphold is easily one of the worst exchanges I've ever used or ever had to deal with, particularly with BAT, and I don't see why anybody actually uses Uphold Exchange. So that makes total sense. Until the SEC lawsuit is resolved, while Indonesia crypto exchange Indodax said the token has a risk of being delisted. So a big movement for that to get this back onto exchanges. And again, when it does get back on exchanges, I think they'll all do it around the same time because they all suspended or delisted it around the same time. So it should come back around the same time should XRP be found to not be a security. And it's sort of just like opening the floodgates. Institutional investors may add it to their various funds or add it to their company's bottom line. And with all of the floodgates of exchanges opening up, because you got to understand that a lot of people don't actually use multiple exchanges. There are people out there that will only use Coinbase or only use Binance or only use Kraken or something like that. And if a coin is removed from it, they'll just find some other coin to spend their money on. They just won't buy XRP at that point. So the floodgates will open eventually. And I think XRP to $1 or close to it, or at least back to 70 cents when there was that pump previously, is probably not out of the question. So moving on here, as the lira plunges, Bitcoin's interest among Turkey's poor spikes. So the Turkish lira plunged this morning 15% against the dollar as President Erdogan sacked late Friday night the reformist central bank governor Nasi Agbal. I don't know if I said that correctly, but either way, that's not what this channel is known for. Replacing him with an ally figure, Sahap Kavkloglu. I got nothing. Turkey's currency is historically plagued by high inflation, having also recorded a 23% drop against the dollar last year and was in free fall until the previous governor, appointed in November, raised interest rates to rein in inflation despite Erdogan's stance against high interest rates. The reason why he was ousted, according to an analyst who spoke to Decrypt. So basically, he was fixing the economy, and then Erdogan didn't like fixing the economy and then ousted him. Right? According to Google Trends data, which tracks Google searches, the number of searches for Bitcoin in the country last night reached peak popularity, a relative score of 100 within the last 7 days, coinciding with the Turkish social media shockwaves as Asian markets opened fresh lira turmoil. But a further analysis into the Google Trend data shows that interest in Bitcoin spiked, particularly in some of the country's most impoverished provinces. Among the top three are three provinces which I probably can't announce. One is Batman, apparently, which is probably like Batman or something like that. But that's Batman to me. That is totally the province of Batman. And the other one is Hakkari. A nation of 82 million sees its currency crash 15% in a single day. No coincidence that Turkey has some of the highest per capita Bitcoin usage in the world. A growing number of Turks are peacefully choosing a different monetary system that their oppressors can't control. So, hey, another use for Bitcoin in the world. And this is where Bitcoin really comes into play. And when it comes to nations like maybe the United States or England or even European nations that use the euro or something like that, sure, there's inflation. The dollar used to be worth a lot more 20 years ago and even more 50 years ago, et cetera, et cetera. So there's always inflation, and that gallon of milk is always going to be going up over time. But it's very slow, and overall, Bitcoin, in the sense of a hedge against inflation in countries like that, is not so useful. Of course, as a store of value, a peer-to-peer currency, great, all good stuff. However, in somewhere like Venezuela, or in Turkey with the lira and Venezuela with the bolivar, the inflation is absolutely out of control, particularly so in Turkey, or in Venezuela. It's absolutely outrageous. At one point, there was money just flown all over the streets, and people were literally walking by it because it wasn't worth your time. It's essentially like seeing a bunch of pennies on the ground. It's basically not worth your time to pick them up. You couldn't pick up enough pennies fast enough, except for maybe with a shovel, in order for it to be worth your time. And so there was just bills everywhere on the ground in Venezuela at one point. I think it was a couple years back, and that's where Bitcoin comes in handy. So places like Turkey, places like Venezuela, where there is hyperinflation, Zimbabwe, etc. Although I think they somewhat fixed their $10 trillion bills in Zimbabwe by now, I'm pretty sure. But either way, in places with hyperinflation, that's where your money is going to go a long way with Bitcoin, even though the bolivar is worth very little and it's going to buy very little amounts of Bitcoin. Just the fact that Bitcoin, even a year ago was 10,000, maybe a little over a year ago, was $10,000. Now it's increased 5 and 6-fold. So that's where the inflation really, the hedge aspect of Bitcoin is very good, because not only is their currency going down, but Bitcoin is going up. So it's now completely lopsided, and that's where Bitcoin really comes in handy. So moving on, Microsoft reportedly polling Xbox users about a Bitcoin payment option. So tech giant Microsoft seems to be considering introducing Bitcoin payments to its Xbox gaming console online store. According to March 21 Reddit post on Xbox Series X Reddit, Microsoft has put out a survey asking Xbox users about their preferred payment options at its online store. Which of these other payment methods would you like to use on Xbox, they ask, listing Bitcoin as one of the potential payment methods. The same photo has been circulating across several other Reddits as well, such as EthTrader and Reddit Bitcoin as well. So one Xbox user said that the survey is available if you participate in the Xbox Insider program for beta testing OS updates. And Microsoft didn't immediately respond to anybody for comment about this. But back in 2014, Microsoft started accepting Bitcoin to fund Microsoft accounts, allowing United States-based users to purchase content from Windows, including Xbox games. After briefly halting the payment option, Microsoft resumed Bitcoin payments for its Microsoft Store in January, and cryptocurrency-based payments are not currently supported at the Xbox Online Store, hence the question to Xbox users, if you would like to spend your Bitcoin. Yeah, I think we would. I think, yeah. The answer is yes. Would you like to spend your Bitcoin at our establishment? Yeah, probably. That's, I think it's always a yes. Moving on, Ethereum moves ahead with plans for its earlier transition to proof of stake. So this is big, big news, and it's going to be big news for quite a while until proof of stake actually comes out. And then it'll just sort of transition into different news. But basically, Ethereum, one of the most used cryptocurrencies of all of the cryptocurrencies, arguably should be worth a lot more, in my opinion, based on its use case and based on the fact that Binance token, for example, this is like the example I like to use. Binance token used to be an ERC20 token until they moved it to their own Binance blockchain. So basically, they hired a developer for probably very cheap, and to make Binance token and program it so that it's burnable every quarter, etc. That's what they do with Binance token. Yada yada. There's some various programming that went into the token, and for probably something like $20 to $50 in Ethereum, they were able to make Binance token, which again was originally on the Ethereum blockchain for quite a while, for probably about $50. And at the time, Binance token reached a market cap of billions of dollars, probably the low billions, but billions of dollars nonetheless. So you're telling me that a company, so basically what Ethereum in the world is telling us by the fact that Ethereum is only like $1,700 right now, that for about $50 in Ethereum, you can make a $1 billion token. That's what I call undervalued. So Ethereum's planned move to a proof-of-stake consensus mechanism appears to be gaining further momentum after developers proposed merging the existing mainnet with the Ethereum 2.0 beacon chain as early as October, which it was supposed to be much further down the line, starting in December of 2020. They said about 18 months. So this is going to be much, much sooner. The proposal arrives at the same time as another new Ethereum proposal, EIP 3074, which has outlined batch transactions as a means of reducing existing transaction fees. This proposal would be part of the London upgrade proposed for July, which would also introduce a separate and much discussed EIP 1559. So not the Berlin one that occurs in maybe, I think, April. And then London is in July with the ever controversial 1559. And which is designed to cut transaction costs by introducing fixed fees, which go up if the network is above 50% usage, goes down if it's below 50% usage, but it's fixed. So you know exactly what you're going to pay for, and you're unable to pay more in order to sort of get in line, because that's what a lot of people have been doing lately, especially with these new ICOs that have been coming out. There's sort of a new wave of ICOs that have been making their way back into mainstream after being pretty much dead from early 2018. And the idea is that you have to supply some Ethereum as fast as possible in order for you to get a cut. If you do not get a cut, the Ethereum is just sort of refunded to you. But the way to get in very, very quickly is not just use MetaMask. MetaMask usually has a low, a medium, and a high fee option. Then it has a custom option. So people just straight up skip the high fee option, which would get you in faster. And instead, they put in a custom fee and then just pay an absurd amount or several $100s worth of Ethereum as a fee. And then that way, the miners will essentially get them in during that block, and you will almost guarantee yourself getting into some kind of ICO or getting yourself some kind of NFT sooner than other people. And so that'll fix that, make that a little bit more fair, but it doesn't necessarily lower fees. It just makes it more expected fees, if you will. So submitted to GitHub yesterday, Mikhail Kalinин's proposal is to accelerate the move to Ethereum 2.0, largely by ending work on other initiatives so that the merge becomes the main focus of Ethereum core developers. So essentially dropping a few other things they had planned to get proof of stake faster. In response to the proposal, Ethereum Foundation community manager Tim Bajko replied on GitHub with a link to a similar proposal from Thomas Kajetin, who wants to execute the upgrade in October, 3 months after London. It therefore seems that a growing number of developers and members of the Ethereum community are rallying around an earlier launch date for Ethereum 2.0. Kalinин's latest proposal also follows on from Vitalik Buterin's quick merge proposal from last week, in which Ethereum founder outlined a technical mechanism by which a merge can happen quickly. It also arrives in context of steps to reduce Ethereum's currently high transaction fees. Very high transaction fees. To be a little bit more specific, let's put a very before the high. So basically, they're trying to move it a little bit faster because miners are, quite frankly, not participating very well at the moment. They're not playing by the rules, and they're trying to move their hash rate around in protest because they don't want their precious Ethereum fees to go away. On that end, I do not blame them. On the other end, you have to understand that, well, I mean, the entire, sure, miners are making a lot of money, but the entirety of the rest of the Ethereum community, including developers, are are having a hard time making dApps, contracts, etc. Also just purchasing it, sending it across the blockchain for any kind of reasonable fee, using DeFi. So basically, at this point, not unusable, but quite expensive for the entirety of the rest of the community, aside from miners. So one of them has got to go, and sooner or later, it's going to be the miners. Moving on, Satoshi Nakamoto's view on Bitcoin's energy consumption resurfaces. So I thought this was an interesting article, and I enjoy everything that Satoshi Nakamoto said before he disappeared or died or left or vanished, whatever he did. As the price of Bitcoin soared over the past year, it's increasingly attracted criticism for its energy consumption, which, to be fair, has been going on for quite a long time. I remember in 2017 when I started doing news about cryptocurrency, there was plenty of criticism even back then and even before that, with critics touting eye-popping sums of energy cost per transaction. Should Bitcoin scale to rival a payment platform like Visa? Bitcoin advocates have mounted a robust response, but perhaps the best justification for cryptocurrency's energy consumption comes from Satoshi Nakamoto, who vanished in 2010. Their riposte to critics resurfaced on Reddit this weekend, more than a decade after it was first made. The utility of the exchanges made possible by Bitcoin will far exceed the cost of electricity used. Therefore, not having Bitcoin is a net waste, wrote Nakamoto in early crypto forum Bitcoin Talk in August of 2010. Did he really disappear in 2010? I thought it was a little bit later than that. But either way, again, I really like the quote. Basically, not having Bitcoin is a net waste. Real clever of you on that one. Bitcoin uses a consensus mechanism known as proof of work, which miners compete to solve cryptographic puzzles, which I wouldn't even argue that it's a puzzle. It's more just trying random things. Your computer is basically trying random things. It's according to the nonce, the nonce is basically saying to your computer, hey, this is a good place to try. This is a good place to start. Start your gibberish, and your computer produces an unbelievable amount of gibberish with a already set up Sudoku puzzle that it just goes, okay, this is equal to this. You can do SHA-256 by hand. In fact, some people can do about 0.5 hashes a day or about 1 hash a day by and by trying random gibberish and trying to make a proper hash, but too slow. Prior to Bitcoin, other digital currency distribution methods have been attempted with no success. Nakamoto reasoned that Bitcoin issuance had to involve provably burning energy, as there was no other way to distribute units of digital value to the world fairly and in a decentralized manner, which particularly at the time, I certainly agree with that. I mean, without the usage of electricity and provably burning your electricity, and the proof of work concept if you're wondering exactly what the proof of work is, it's really just something we sort of made up. It's not anything, really. The idea is that in order to produce a proper hash at the moment, the difficulty of Bitcoin is so high that you need to find a hash that starts with, I believe at the moment it's about 19 zeros. It could be up to 20. So 19 zeros plus a hash after that is equal to or less than the nonce, than the previous nonce, or it might be equal to or greater than the nonce. I think equal to or less than. So basically a big number this long. And you could take a SHA-256 calculator if you want to right now. Just Google SHA-256 calculator and try and type in some gibberish on your keyboard. It doesn't matter if it's an actual word or you just go like this on your keyboard. Try to produce something that has 19 zeros. You're going to be at it for a very long time, my friend. Very long time indeed. But your computer can do it at unbelievable speeds. ASICs can do it at just godlike speeds. And so the idea is that right now the hash rate is something quintillions of hashes per second across the world. So it takes quintillions upon quintillions of attempts over a 10-minute period on average in order to find just one that satisfies Bitcoin. So when you see that in the blockchain, in the block explorer, and you see the previous hash, you have to go to yourself, okay, it's physically mentally impossible for somebody to have guessed or to have exploited a number that they knew exactly would create a hash with 19 zeros plus additional gibberish after that based on the previous nonce. So the only way to do it is to guess quintillions of times, and the only way to do that is with a lot of electricity. Thus, you can trust the previous block because you know it had to have taken quintillions of attempts and a lot of work to do that, thus proof of work. So in the forum post, you explained that the situation parallels that of gold. Gold mining is a waste, but that wasted is far less than the utility of having gold available as a medium of exchange. I think that will be the case for Bitcoin. Gold mining is energy intensive, but because it takes an enormous amount of work to extract precious metals from the earth, and thus it's a little hard to fake, although sometimes gold bars have been faked, but Bitcoin is harder to fake than gold. It's a thin margin business and involves lots of capital expenditure. At the same time, mining is a radically free market, so miners' margins are usually slim with no particularly big advantage for those doing the hard work. The same holds true for Bitcoin. In the same thread, Nakamoto added that proof of work has the nice property that could be relayed through untrusted middlemen. It suggested that he foresaw how countless developers would build so-called layer 2 solutions on Bitcoin to improve its energy efficiency and transaction speed without compromising transparency. In any case, Nakamoto's response was enough to convince his 2010 critic, Griticon, who had originally raised the topic of wasted energy Bitcoin produced. My thinking now, he says, is that Bitcoin does not, in fact, waste computational work at all. Instead, it works hard to deliver the most value possible from that computational work. But today's critics of Bitcoin's environmental impact could prove harder to convince. And that's just because people don't get it. Moving on to CoinMarketCap, we are at $1.7 trillion market cap, so we've fallen from our highs of 1.8 plus trillion market cap. We're at 55,511 Bitcoin. A little bit of uncertainty in the market at the moment. I don't think there's any particular reason why. For a few days previous to today, the stock market did pretty well today, but for a few days previous to today, stock markets were doing pretty bad. And, several days in a row, they were winding up in the red. And the reason why I like to say that is because I believe that there is a slight correlation between the stock market and Bitcoin now. I think the more and more institutions and companies, et cetera, and stock that it's tied to, because companies are buying it and they have stock, the more it's going to be actually correlated with the stock market, or at least to some degree. And so when, hedges need money to pay off others or to pay losses or to buy something else, they may reach into their Bitcoin coffers, etc. We also have just a lot of Wall Street traders in general probably just buying Bitcoin on their own and not necessarily for any institutional purpose at all, just on their own investment purposes. And so, of course, they're going to use the same tactics that they have grown to learn from the stock market. Stock market exchanges are the exact same thing as Bitcoin exchanges for the most part. It's the same buy, same sell order, same TA, same methods. So there is a level of correlation that is building, and I think it'll just get stronger as time goes on, which could be a good thing or a bad thing depending on how well the stock market is doing. But that's all I have for you guys today. Make sure you like, subscribe, share the video. That helps me out a lot. My social media in the description below. Give me a follow on those if you get the opportunity to do so. Also, memberships are active on the channel. There's a little join button down below. Click the join button, $2.99, so you can be a member of the channel. And I know we all like those sick gains. And when you're a member of the channel and you comment on one of the videos, you have a Cool Beans badge, and it makes you look 32% cooler, so that's pretty sick gains. Hey, 32% ain't a joke. And the longer you hold that badge, the more it changes color, and eventually you might have upwards of 50% more additional coolness. Who knows? Who knows how high it could go? But either way, it helps out the channel. But I will see you guys next time.